Okay, the Reaper is back again, and matagal-tagal din naglabas si TUGS ng financial report niya for 2020 and the first quarter of 2021. If you are into the company's business, you will always be excited to look at the financial report of the company itself. Yeah, so for today's topic, somehow we will look at the income statement of TUGS from 2012 to 2020. So it will be a long list of data. Okay. But as I always say, we will make the novel become a comics. But before that, please don't forget to like, share, and subscribe if this video have value to you. Also, please hit the bell button for other video updates and notifications. So our objective here is just to look at the trends of the income statement from 2012 to 2020. How is TUGS performing in the past 8 years? And so for the next objective is to look at the income components and its effects. If there are some components that make TUGS underperform or any factors that will potentially improve its income. So let's start. Okay. So in analyzing the income statement, sabi ni Lolo Warren, just look at the past income statement and see if there's a trend. And as we look at it, it's downtrend. Oh my god. Tapos na. You can stop the video from here. Certainly the earnings per share is also downtrend. And the PE ratio is parang bundok lang. This actually follows the price movement of TUGS. So we're done with our first objective, to look at the trend of the income of TUGS. And definitely it's not the trend that we want. We can now check the composition of the net income. Which of these components will pull TUGS down, and which are the components that are the strength of TUGS? So from 2012 to 2018, it seems like the revenue or the income is just reflecting the costs. Even if the service income are increasing, but the costs are also increasing. So that's why we have an income that is sideways or downward bias. Then on 2019, TUGS has a new source of income, which is the revenue from the solar power generation. But why is it the net income is negative when they have a new source of revenue coming from the solar power? We will take a look at it in a while. By the way, the formula for net income is all incomes minus all costs, which when I say all income, that means revenue from solar and income from the services. And all cost means service cost, general administrative cost, taxes, and even interests paid. So let's check all of this one by one. For the income, we have the service income and solar power revenue, which is in uptrend. So basically, as I've said, we have an increasing income and revenue. And the revenue from generation of solar power has an impact on this trend, even in pandemic times. We also have this other income. So basically what is important to me here is the share in profit or loss of associates. The associates are High Energy Marine, which engages in towing, then Great Eastern TUGS, which owns, operates, manages tugboats. After the income and revenue, we now take a look at the costs. First cost that we will look at is the cost of service, or the cost that is needed to perform the service. Like for example, you need fuel for your barge or for your tugs, and you need also the salary for your personnel. What is notable increase here is the depreciation and amortization cost, as there are additional capital expenditure recognized. Gross profit margin trend is also downwards, but what I like is its comeback, the bounce back from 2019 to 2020. Rule of thumb here is the higher the better. Gross profit margin formula is revenue minus cost of goods or services over the revenue. So when we say the higher the better, that means the higher revenue, the better. Next is the general administrative expenses. What is notable here is the provisions for impairment of trade and other receivables. So this is just the provided amount to match the what should be trade and other receivables amount. Kung sa hugot pa, ito ang pumupuno sa pagkukulang na hindi kayang ibigay ng minamahal mo. So for example, the should be collectible amount is 100 pesos, but you can only collect 50 pesos. So you provided another 50 to match the should be collectible amount. But this 50 pesos comes from your own pocket, thus it's a loss from your own pocket. It is now called impairment loss. As to why they have this impairment, that's for the management to improve, to take a look at their bad debts, improve their collection of receivables, or else this will be eating up their cash unless they want to also take advantage of the tax benefit due to losses. As for the other expenses or loss, so we know already the net impairment loss, which we discussed earlier, which has a significant amount. And then finally, the interest expense, which is the one that eats up the gains of TUGS. These are the interest payment from their borrowings.